Hello and good afternoon, traders. It is 3:30 Chicago time on Wednesday, the 19th of May, 2021. Really excited to have you on board here for our public AMA. This one is focused on making the turn in trading, which is a big topic for a lot of traders. This is a topic that we actually did within Convergent as one of our mindset for this month's mindset study hall, or last month's maybe. And it was very well received with many questions. So we wanted to open it up to you guys. Whoever's not a Convergent member, of course, I encourage you to follow or to join. But I do want to remind you that derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. What I should have done first is ask you if the sound is nice and clear. We test before we start, but if you can't hear me, you probably don't know what I'm saying. But if I sound faint or whatever, you may want to adjust the sound on your side. So here's what we're going to cover today. So the way this is structured is I'm just going to go over some stuff just to give you a baseline, and you can ask your questions at any point. And Landau is here. Landau is a part of the Convergent Trading team. He's here to come in and ask the question as they are presented by you. But this is what we're looking at today. What does making a turn mean? Stages of competence review. We just want to go over that for a minute. There's a poll attached to that I'd like you to participate in. The poll's anonymous. Requisites to making a turn to consistency: effective, intuitive execution, the emotional state, the mythical turn that comes overnight, dealing with damage or a bad streak. We may or may not cover all of these. I'm hoping to get to them, but this is an AMA, so I want to cover this stuff in 15 minutes. So hang tight. We're going to go quickly here. Stages of competence. You must know the stages of competence. These exist for all skill sets. Anything you want to do, there are stages, the same stages of competence in human learning. Here they are. They can be found on the Convergent Trading website at go2ct.pro/stages, all lowercase. But the first stage of competence is unconscious incompetence. This is basically coming into something, thinking, not knowing enough about what you don't know. A lot of times we come into something and we learn a few things, but we have no idea how vast the knowledge base is that's required to get there. That's the unconscious incompetence state. That is, you just don't know that we don't know that we're incompetent or we're unaware. The second stage is conscious incompetence. This is when we find out that, oh, shoot, there's a lot more to this than meets the eye. There's a whole lot of work I need to do, and this is where the real work starts. A lot of traders, I'd say the vast majority of traders who are consistently working at becoming consistent are in stage 2, some gradient of stage 2, beginning, middle, and something like that. Conscious competence is when we are skillful at this point through a lot of practice, experience, deliberate focus, things like that. But we have to do so consciously. We're still using our left brain to kind of think through the process, and the left brain, it operates more of a serial SERIAL configuration. In other words, can I be typing an important letter while listening to someone talk? This behavior, the skill set here is serial in nature. So if you're talking to someone who's in the middle of typing on their phone, keying in on their phone or typing on the keyboard, unless they are exceptionally gifted somehow, they are probably either not typing anything meaningful or they're not listening to you, most likely not listening to you. So that's the logical side. And then stage 4 is when that logical side becomes muscle memory or moves to the right side of the brain and becomes what we call a subconscious skill, right? So think of think of something as simple as learning to chop, um, you know, onions or some vegetable. When you first learn it, you have a sharp knife and you're sitting there focused and you're cutting, and you're very focused, and there's some instructions that you're following from your chef teacher or whatever. But once you've done this for some time, you throw the vegetable on there and you don't even think about it, and it happens very quickly with very little attachment and very little in the way of thought or processing. This is stage 4 of competence. Okay, so that's what they are. Take a good look, because I'm about to hit you with a poll. So there's a poll in front of you. You can vote on which stage of competence you're in. I'm going to give you a minute. There are 50 seconds left. 20% of you have voted. And just decide on which level of competence you're in. Again, we don't mine this data. We don't know. So if you set yourself up for stage 2, that means you are not consistent, but you are kind of pushing to be that way. Stage 1 is you just started and you're just not aware of all the skills that are needed. And there are many people that are in that stage, given the events of last year, giving more and more people the ability to explore the markets. We're 10 seconds away. About 65% of you have voted. 5 seconds, 4, 3, 2, 1. We're going to close this poll. And again, the stages of competence, 1, 2, 3, 4. Okay, unconscious incompetence, conscious incompetence, conscious competence, and unconscious competence. That's expert level. Here's what this group has said. 70% of you have voted, and that's what the result is. 46% and 46% at stages 2 and 3. Surprises me. It's nice to see many of you are at stage 3. That's a very cool thing to see, actually. But that's where your cohort is during this webinar, or your peers are during this webinar. So moving on, here's some requisites. These are key elements of making the turn. So these are the things you must put together based on my experience having backed traders for a while. This is what you need to put together to be able to get to a stage of consistency. Do the work. You need to study whatever your product is, study your method, test it, write your strategy, document your performance, and be accountable. Very important. We encapsulate that within Convergent Trading as the Trade Right program. For members, go to ct.pro/tr-program, and that'll put you through all those videos and everything else. It's included in your membership. We need to get to a point. In order to make the turn, we need to get to a point where we trust our strategy and outcomes, and we base this on a large set of traits. So just because you did great today doesn't mean a thing. You're only as good as your last trade on the short term. It's really your ability to consistently execute on a large data set. That's what really matters. Having done 10 trades and won and doubled your account isn't going to get you a prop job. That doesn't matter. That falls into the realm of randomness. So in order to get to a large data set of trades, you have to trust yourself. You have to trust your risk. You have to trust the plan. And the bigger the data set, the closer and closer it gets to your true edge, which is what we're working to discover. Remaining aware of our emotions, and protecting our confidence. Very, very important. Just knowing that emotions are energy within our body, and they drive action, right? They force emotions, kind of propel us to do things. And so those of us who are emotionally aware, we are able to stay inside the boundaries. We'll talk about that in a minute. Market understanding, know the market regime and how it fits in your plan. The market is constantly changing, constantly adapting, and the market regime doesn't necessarily favor your plan all the time, right? So you need different tools for different market regimes. Maintaining risk parameters and sticking to them, really important. Risk control, the most important thing that we have to contend with on a day-to-day basis is to survive. We want to survive and be here tomorrow. Without that, game over, right? Create a routine and process that works for you and stick to it. Really important. Everything you're going to hear me talk again and again and again about things being process-based. Effective, intuitive execution, having a process routine that is continually followed. If you're doing things differently every time, it's going to be very hard for you to troubleshoot, to grow. The market is different every day, but how you approach it and what you do. And for those of you who follow the Trader Bite, you'll notice that, man, this guy's doing the same thing every single day. And that's how it has to be. That's how it's been for me for a long time, for 21 years almost of trading. Took me about a couple of years to figure that out. But a consistent routine. Movement of actions to intuition. This is moving stage 3 to stage 4 of competence. So move your actions, whatever you're going to do to execute, move that to intuition. This is our goal. We don't want to trade. Our trading plan can't be intuitive. Okay, so let's make a very clear distinction here. How we trade can't be intuitive. Trading from the gut, I know some people kind of swear by it, is not the way to trade. It really isn't. It's very hard to control. It's very hard to be consistent when our execution is intuitive. But our actions should be intuitive, meaning we don't think anymore about what we need to do when we see the pieces come together that are part of our plan. I see certain things happen, and I do. And there's no question, there's no thinking, there's no waiting, there's no confirmation. I see it, I do it. I see it, I do it. Okay? Very hard to get to this stage. Again, it requires a process and routine that is continually followed. Right? Get out of our own way. This is what the end result we want. It's not about us. It's not about our needs. It's not about how things are going. It's not about our, are we going to make it? Are we not? It doesn't matter. None of that matters. That's just noise being introduced by our ego into the equation. It doesn't play into what's happening. And so what we want to do is just become as consistent with execution as possible while maintaining a methodical approach to analyzing the market, forming a bias, but execution has to be almost kind of like a soldier firing a weapon. There's no thinking at that point. The emotional state, maintaining calm during trading. Equanimity is the ideal state. Equanimity is the ideal state. Equanimity means mental calmness, composure, evenness of temper in difficult situations. This is the perfect word for the state of mind that we're after when we're trading. This is what helps us make the turn. Doing the work but not seeing financial results, frustration ensues, feels like this is pointless, periods of self-doubt, doubt about the possibility, hostility towards the market and those in it, renewed zeal and drive to overcome how we feel. So, not seeing results can have us go through this whole whirlwind of reactions. It's just, hey, yeah, this is a joke. Nobody makes money. It's impossible. I did everything that I'm supposed to do. Did you though? Do you know what you're supposed to do? But really what we want is a renewed zeal and drive to overcome how we feel. This is the part of the equation that involves grit, right? I know that I can do this. I know that I'm not doing 100% of what I need to do, and therefore I'm going to dust myself off and stand up again and do this again. The more time we waste not doing what we're supposed to do, the harder it becomes. It is key to have other outlets and sources of energy. Once the trade is done, go do something else. So you're doing your homework, go work out, go spend time with your kids or family or doing whatever you like to do. The mythical turn. So we're going to pivot here real quick. My 15 minutes are up. The mythical turn that comes overnight. A lot of times people say, oh yeah, I just, boom, it just happened. It just absolutely happened for me. I suddenly saw the light and I couldn't do any wrong in the market and everything was perfect. This is really untrue. It could happen, but it's not realistic. The idea that I can buy a system or an indicator and all things will click for me, highly, highly doubtful. So let's manage our expectations and know that it's an iterative process, iterative. You do something, you track it, you see the results, you improve on it, catch your errors, you do it again, you learn something else is a problem, you deal with that, and back and forth, this cycle back and forth, back and forth, back and forth. But let's manage our expectations. This is my personal experience. This is how the turn looks. This is how it's looked for a whole bunch of traders that I've backed financially. It took in our pressure cooker environment still, it took a long time for traders to make the turn, usually somewhere between 6 and 9 months, and that's on a highly focused environment. I would expect 2 to 3 years for an independent trader who's not in any kind of a structure, doesn't have accountability, doesn't have good tracking systems and things like that. It could take a while. And then somebody who's insisting on remaining on simulators and constantly tweaking and changing their plan, it could take 10 years. I mean, I know people who've been struggling and simming on TradeStation for 12 years. I don't think that's going to help anymore. But this is the mythical turn that comes overnight. It doesn't. It does not. Generally, the dotted line is a hypothetical starting capital. Again, always past performance is not necessarily indicative of future results, but we stage one of competence. You come in, your buddy's killing it on Bitcoin or Doge or whatever, ETH, and they made a bunch of money. They followed somebody on Reddit, and then come the hits, right? Boom, 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 and you end up in this down flow, and this is where a lot of focus goes, right? This part here, it's just like no matter what you do, it's just continuously falling, and then you get some stability. And it seems like, oh wow, I kind of figured things out. I changed my charts around and more. And oh, okay, I see what I did wrong. Now I'm better. I'm a better trader. I'm more of an expert. And so I'm seeing results and more. And a lot of this has to do with behavioral change, adjustment of our beliefs, our expectations, our process, more so than the market itself. The market, of course, has an impact on this. If you're trading a product that doesn't move, well, that's tough. It's tough to make money in it. Then you get this kind of humble, slow process, and then it flattens out. This is the point where my experience with brokerage, and just looking into people's accounts and seeing the emails and stuff like that, people who want to give up or close their account, this is where they're at. They've gained much of the experience, they've gained much of the knowledge, but it's just exhausting at this point. Again, because it just takes a lot out of you, right? And then we start to see some improvement. Hey, I'm seeing this. I'm back to break even. And again, we experience another drop generally. So you get a drop at the beginning, a drop in the middle. And what happens here is people start being reminded of the trauma that existed here. And this is another area where traders like, forget it, it's not going to work for me. But shortly thereafter, this pain, the suffering of not being able to maintain a straight up 45-degree equity curve is this is very close to where we would be before things start turning. It takes a lot, an awful lot, to get to the point where we are really clear about what we're doing and we're doing it consistently, and there's not an argument or discussion within us about what needs to happen next. So moving on, what does it take to make the turn? A lot. Knowledge, a lot of work, a lot of repetition, resilience, grit, emotional awareness, movement to intuition, ability to remain humble, maintaining focus on goals and progress. So a lot of that requires accountability, good journaling, good error tracking, and trapping errors. This is what it takes. There's a whole lot that occurs underneath the surface. I know many of you have seen this iceberg example. You see the tip, you see what's outwardly there, but there's a whole lot underneath that we're unaware of. Okay, let's jump into questions. I used up about 20 minutes. Do we have any questions, Landau?
We do not in the chat, but let's go into the comments from the public page. The first one is FT. Can you comment on what would help someone that has seen the opportunity the market offers, knows that, albeit small percentage, there are people who consistently profit from the markets, yet due to his own losses and failure for years, can't translate that belief for themselves and constantly deals with fear and doubt that he can achieve the success that he sees possible in the market? How can a person get over this giant heavy rock that they feel is crushing them constantly?
So it's a great question, and it kind of ties in with what I said, that it just takes a lot out of us. The knowing that this can be done is what keeps us kind of engaged. But the issue here is that, you know, excessive losses and failure for years, that statement right there, this is the problem. This is what causes the most pain. Those people out there seeking $500 margins on the ES or NASDAQ, looking for the lowest margin, lowest commission, looking for people who are trading bigger when they're down, which is the opposite of what should be done. People who are jumping from one method to the next. Hey, I like this guy. Let me follow his method. I like this guy. I like this lady. Let me follow her method. Oh, I need to add this thing. Oh, I need to move to this piece of software. All of that introduces drag. And there's nothing more damaging than coming in and absolutely destroying an account over one trend day down or sell-off day, and you just keep buying it, or a rally day and you keep selling it and selling it. And it all goes back to lack of planning, lack of routine, lack of emotional awareness. So to answer this question, I'd have to push it back to you to say, what of these pieces that I covered here, what's missing? Where's the problem? And it could be many of these, could be all of these. And the issue with trading is that we make it easy. We make it easy to open an account. We make it easy to fund an account. We make it easy. We tell people that you need to come to us or go over here because of lower margins. Well, margins are there for your protection. Higher margins reduce your leverage and are there for your protection. So why are you taking those off the table? Why are you reducing those? And so our priorities go to the wrong place. Now, we want to follow somebody who's popular, an influencer. We want to follow, but is this person telling you what you need to do for your own psychological makeup or the way you see things? You know, an engineer doesn't think the same way as an artist. And so it has to fit your personality, and then you have to make it fit your budget and your account size and your risk tolerance, all of these pieces. And unfortunately, because we make it easy to get into the market, we have what are often quoted, although never proven, these extremely high failure rates. 80% of traders will fail. 90% of traders will fail. Well, gee, who are these traders and what do you define as failure? This is the problem. Okay, so what aren't you doing? The good news, although I'm throwing it back at you, the good news is this. The good news is you control that. If it was something outside of you, then I'd say go learn another skill, go do something else. But the fact is, as long as the problem is within us, to me, that's empowering. So take heart in the fact that you just need to do what you need to do. You need to come at this very, very professionally. You need to trade right. Okay. What else?
Do you credit a particular lesson, moment, tool, and or trading metric or strategy as the primary driver in becoming a successful trader?
Absolutely not. That's the exact. That's exactly what I was covering here. That there's just no overnight. It's truly a grind. Think of it much. Think of it much less like dropping a quarter into a machine and you get your candy bar. It's not like that. Hey, I got to spend money here and boom, hit a button and it comes out and it's perfect. And think of it more as seeding, watering, caring for, and then later harvesting very slowly. Think of yourself as a farmer. The analogy would be a lot like farming. It's a process where you have to be diligent. You cannot forget to water the crop. You have to seed it at the right time. You have to nurture the soil and feed it so it can feed your crop. And then later, in order to eat, you have to actually go out and cut the crop and store it properly so it doesn't rot, and care for it and so on so bugs don't kill it. It's that this is the process, right? So it takes a while. It takes consistent coming in, and this is why mental state's really important. Meditation is important. Breaks away from trading are very important. Breaking streaks is very important. You came in yesterday, you were a limit down on the day. You came in today, you're a limit down on the day. Don't trade tomorrow because nature supports streaks. It just does. Like a basketball player who's really hot, right? They're shooting 3-pointers and boom, they're landing. They're hitting 95% of their shots and now everybody wants to pass them the ball. That's a streak. It comes to an end at some point. And it's so you want to break these bad streaks. You want to press good streaks. So there is no moment or tool or anything. It's just refining things because at the end of the day, it has to fit you. Whatever I'm doing, if you duplicated it click for click, your results will be dramatically worse than mine.
As a small retail equities trader, I have two main obstacles. One, screening for the best opportunities for me, which is swing trades mostly. The tools available are limited. Two, when I review trades, I can see I missed a good profit exit and sometimes even let them slip into a loss. Not to blame tools, but indicators that help to see reversals seem absent, lacking, or lagging. Is there a method to overcome my blind spots?
Yeah, it sounds like you're relying on a tool. I would say that's good. That tool is a good thing for your arsenal, probably. It's giving you some information, but please make sure you understand the market. Please make sure you understand the product you're trading. Please make sure you understand why, when you bought it, other people want to buy it at higher prices than you so you can profit. Just understand the full process. understand why you're doing things, understand why the market's moving up or down, or what it's trying to test. What has it done? What is it trying to do? The market has a purpose. It's not there to take your money and run your stops. Believe me, it's not. Nobody's interested in your stops. Nobody's interested in my stops. Even if I have a 50 lot on, it does not care about a 50 lot. It cares about very large billions of dollars of notional value. My 50 lot doesn't mean anything. So don't look at the market as an adversary. Just look at the market as a force of nature. The market is a force of nature. It is our job to align ourselves with that force of nature, not to oppose it, try to force it, try to make it do what we want. It's like trying to control a tornado, how a tornado's path is going to be. No, it does its thing. Just stay out of its way and put devices in place to protect your assets, and that's it. Risk control. So the blind spots are probably a kind of a stage 2 of competence issue, where you might want to learn about how the market auctions, or how your products, it sounds like you said you're in equities. Why are you trading those sectors? What's driving your stock? What's driving that sector? You know, this is why I don't trade stocks. There's just way too much to take into account. Whereas a future contract, everybody's looking at the same thing, and it's me against another participant. The CFO doesn't matter, the CEO doesn't matter, the sector doesn't matter. It's one, place for all of us to trade, one spot. What else do we have?
What method should a trader use to modify their trade evaluation process if they are a break-even trader? And how do you determine if it is you that needs to change or your process?
Wow, that's a good question. So you're asking what method you should use to go from break even to a profitable trader? Is that the sum of it?
I believe that's the question, yes.
So there are 4 things you have to get right to be profitable. Okay. So I can't answer your question in the detail that I would like to, because I don't know what your method is in order for you to be break even. The 4 things are, and I'm going to not consider time. Time's really the 5th thing, but time is just there. Time is constant. The 4 things are: you have to get your bias right, long or short. You have to get your entry right. Am I entering here? Am I going to take price risk or information risk? Am I going to wait for information and therefore get a worse price? That's price risk. Or am I going to take this price and then wait for the market to kind of turn or confirm, and therefore you're taking information risk? You're throwing away more information for better prices so that it's a better stop out for you. The next thing you need to get right, so you have your bias, long or short, or even not doing anything, that's a bias. Second, your entry. Third, your stop, because I can be right getting long, I can be right with my entry, but if my stop is too tight for the product that I'm trading, then that's going to take me out of the trade for a loss instead of a winner. And then the next thing you need to get right is your target. The distance to your target is important. Is it balanced with your stop? Is it attainable in your bias? Is it attainable with your entry? So I have an entry. Is that entry balanced with my stop? I need at least a 1.25 R or better, potentially 1.5 R, in order to have a sustainable trading plan. I'm going to do very poorly if I have a 0.7 R or 0.5 R. In other words, I make half of what I lose. That's a tough gig. Okay, so those are the 4 things: bias, entry, stop distance, and target distance. And of course, timing is just important to everything. And any tweak of any of these components can make a huge difference. So I've done this in the past where I've taken somebody who's kind of break even, consistently break even, and looked at their ability to get a scale out versus the percent full stop. And all we had to do is adjust the first scale out distance to bring their R factor a little bit higher, which put them over break even over a large data set, right? And so there's a lot that can be adjusted there. It's hard for me to say which parameter needs adjustment. It's a complex thing, okay?
How much longer did it take to become profitable once you felt that further technical analysis would not greatly benefit you?
Awesome question. So when in doubt, learn more. This is our education system, right? I have an issue, I just need to Google it. Or I need to go to the library, or I need to get another book. This is how we're educated. More information equals better. Unfortunately, in trading, this isn't the case. There is a point where very quickly learning has a diminishing return. It moves from, we go from the learning stage to the doing stage very quickly. We need to get there very quickly. And this is one of the issues I've come across in the last 12 years that I've been out in the public and seeing what online traders are doing independently versus what we were doing in my prop shop. And with my prop shop, there was a lot of emphasis on learning, right? We want you to understand what a futures contract is. We want you to understand the nuances of it. We want you to understand the underlying sectors of it or the underlying product. We want you to understand how the auction works. We want you to understand how to use your charts, how to use your trading platform, and so on and so forth. And then it stops. That is maybe 6 weeks, 6 weeks or so, or 2 months of education. That's the end of that. If I see that someone's deciding to buy Mind Over Markets, then they get the Disciplined Trader, then they get Trading in the Zone, and then they get the Enhanced Trader, and then they go and get the Sniper Trader, the Darva's, boxes, the Candlestick book by Nyson. And I noticed that this person is just reading books. That's a person that's probably not going to make it. I'm going to be very blunt with you. That's a person that's not going to make it, most likely. The person who's going to make it is going to be the more of the executive type. Here's the information I need. I don't need much more information than this. I don't need another book. I need to just do. And that's where the true education happens. It's in the execution. This is why you don't want to be on a simulator for very long. You want to be live. This is why I've pushed for micro contracts since 2012. They finally got released in 2019, but better late than never. You want to go to live because it brings in elements that are very difficult to account for in a simulator, and it really enhances the education because now it's real money. There's real money on the line. And so you want to if you want to move quickly through stage 2, which is my guess is, in my experience is, that's where the bulk of those who are listening are at. They're either at the lower stage, stage 2, or upper stage 2, and sometimes floating into stage 3. It just seems like they just see it, they can't do wrong, and then they fall into stage 2 and back and forth. This is a natural thing. The biggest thing you can do there is be very, very deliberate about executing, following your routine, executing, tracking, recording, so journaling, saying what the heck is going on, and then setting goals for the next day. Here's what I need to, I'm still screwing up my trades by micromanaging, or I'm still getting in too early, or whatever it is. Tomorrow, my entire focus is going to be on putting the trade on and just keeping my hand off the mouse. Let's see how that worked out. Come back, journal what happened there. Okay, what's the next step? This is the doing that teaches. So it's not about how much technical information do I need, because at the end of the day, I just need to understand the basics. What is a futures contract? What drives the market? So what is the auction process? Everybody needs to know what that is. What is the volume doing? I use volume profiling for that. What's the volume doing at every price? And then move into what do I need for a risk plan? What do I need for a trading plan? And what do I need for an execution plan? And then my goal is to track my performance and just rinse and repeat. And my goal is not to stake 20, 30, 40, 50% of my account on one trade, because I would then sabotage my ability to practice, because I've just given away too much on one trade, and I'm not able to continue to take more risk and more opportunities to work out my plan. You know how many of you here, let me ask you, how many of you here have heard that the 10,000 hour thing? You need 10,000 hours to be an expert, a true expert in your craft. This is something that Malcolm Gladwell, popularized. It is completely wrong, because the research he based it on was misrepresented, and the guy who did that research, I think Anders is his name, came out and said, no, that's not what we said. But I can tell you, in trading, it's not the number of hours. People are sitting in front of their screens for 16 hours a day. It doesn't help. It's really about the number of trades. The number of samples and executions is very, very important. This is not to entice you to trade futures, but it's what's required. Like, I can read about playing soccer for days, and I can play FIFA 2021 on my PlayStation for months, but until I go out there and kick a ball around, and then go out there and practice with a team, and then go out there and play a game, and then go out there and be in a championship or playing 2 games a day, I'm really not learning. So once I learn the technical parts of soccer, like I can't do this with the ball has to fully cross the line to be out, I can't slide tackle someone's ankle, I can't touch the ball with my hands, like that you can work out through a book, you can work out through PlayStation, but in order to work out the skills, you have to be out in the field. There's no such thing as talent. I've never recruited a trader because I believe they're talented. There's no such thing. Talent is a hoax, and so is the 10,000 hours thing. Okay.
There's a few traders asking about how to eliminate FOMO in impulsive trades or to stop their overtrading.
Okay, great. This is a common issue. We are out in a forest somewhere where we have our rifles, or let's be more fair to the animal. We have our crossbows, and we are out hunting. And it's required because the area is getting overgrown or whatever, and it's hunting season. I don't really care about what we're hunting. And you're in a group of people, and you're one of the hunters. So you've got a lot of arrows, you got your crossbow, and then you're the person that's out there. Every time there's a rustle or a twig snapping in the trees, you pull out your bow, poof, you let go of an arrow. And then you hear another rustle, poof, let go of an arrow. And then there's a move, poof, you let go of an arrow. Somebody says something, you let go of an arrow. That's basically what overtrading is. Very quickly, you're going to find people kicking you off that excursion. Somebody's going to send you down the trail and tell you to go home and to never come back. Trading is a lot more like hunting. There's a lot of waiting, a whole lot of waiting. It's a tough skill. And things just look right. The the animal starts appearing because you're quiet and you're calm and you're ready, and it just appears. And even when it appears, you don't shoot at it right away. You have to have it positioned in the right configuration. Hitting an animal that's walking towards you is a lot harder than broadside, having the full side of the animal, right? And it's a calculated thing. You need to look at, if I pull the trigger now, where's my target? What obstacles are in the way? And therefore, where's my stop? And if my stop is here, is that stop inside of the noise within this product? And all these calculations are happening very quickly. I'm gonna get long 4104 in the S&P. My stop is 40.99. Wow, that's 5 points. Okay, if I'm taking 5 points of risk, do I have 10 points of room to the upside? Well, today's high is 41.1375, and I'm going for that high. Believe the market. Okay, 41.14, so I'm taking 10 points of return for 5 points of risk. Done. Okay, let's wait to see what happens at 41.04. The market comes back, it crawls back, it crawls back, it crawls back. It's within range of your arrow now, within range of your crossbow. And now you're looking for it to start failing to push below 41.04. And as soon as it starts lifting, boom, you hit it. So how is it possible to have FOMO or over trading in that situation? So the summary of that is, the reason FOMO exists and overtrading exists because there's a lack of a plan. There's just a lack of understanding of what the market is about and what you're looking for. So when you're that person who's going out for a hunt for the first time and you're shooting at every noise, a little squirrel moves and you shoot at it, a little rustle in the leaves, you shoot at it. It's just you haven't defined what it is you're hunting. You haven't defined your approach, the risks. And so anything and everything excites us, especially if it's a thinner product like the NASDAQ, Russell, crude, RBOB, gas, that sort of stuff. Move to a thicker product, create a plan, wait for the market to come to you, and trade it. But when I say wait for the market to come to you, define where you're trading and just wait to see what happens when you're there. If you miss the trade, it's okay. It's better not to be in a trade than to get in on a trade and have a losing one. It is, despite what others will tell you, it is, because there's always another opportunity. There isn't if all of a sudden you have a series of 12 trades limit down. That's not going to keep you in the game very long. Anything else? We have about 12 minutes.
Someone's asking, did you have a mentor or an educator? And if so, how did you know that you could trust your mentor? And how did you know when you didn't need your mentor anymore?
Okay, so I'm going to burst your bubble here a little bit because the whole premise behind this webinar is transparency. I don't believe a mentor is useful. I really don't. I had this conversation with someone else today, out of synchronicity, I guess. How did I learn? The biggest advantage I had is a community, period. This is why we started Convergent. And I'm not doing that to plug or market to you, but it's different still, because when I started trading, I traded in an office with professional traders. I was in Florida. I just quit my construction job. I joined this group of traders that had Ferraris and Lamborghinis sitting outside. The town was called Vero Beach, still there. And I joined an equity scalping group, So's Bandits, trading through Hold Brothers. And when I walked into that office, people were making and losing $18,000, $20,000, $25,000 a day on active days. And the person who brought me into trading had a $250,000 day trading equities, huge volume, right? Trading Microsoft and others. But did that person sit me down and say, here's what this column does on your trading platform. Here's what a bid is. Here's what an offer is. None of that happened. Nobody walked me through. The only advantage I had was that I could see that other people were making money. Again, past performance is not necessarily indicative of future results, always. We just don't know what's going to happen next. But I didn't have a mentor. I didn't have somebody who's going to go through my trades. I simply put up money, my own money, $45,000, to have buying power as a trader, as an equities trader. And all I knew is this: other people were making money, that they're doing this daily. That's it, period. And the rest of it was just me reading The Disciplined Trader, reading a couple books on chart patterns, but none of that mattered. What really mattered for me is understanding the randomness in the market and understanding how price moved. That's what made a difference for me. And that's in front of us all day, every day. It's what I've talked about for years now. So I didn't need a mentor. I created a spreadsheet to track my performance. That spreadsheet got enhanced over time. I used spreadsheets for much more complex tasks. I would enhance that spreadsheet, and that spreadsheet became my trade analyzer, and then eventually tied the spreadsheet through DDE links to my trading platform, and so it developed, right? And so this is what allowed me to then track my performance, and then I could see how damaging it is for me to ignore risk and to just fight the market. It didn't take long, and I did this while trying to support a new wife and a new child, a newborn, with no other source of income. And so I'm living off of savings, and that's what I was doing. I didn't need a mentor. Here's the problem with mentors. Mentors may have the best intent. Mentors may tell you what they believe is the right thing for you to do. Mentors may have exercises and whatnot, unless it's some sort of a clinical psychologist or a performance coach or somebody of that caliber. A mentor's charging you for time, and there's a direct conflict of interest as far as I'm concerned, because you're probably paying them per month or per hour, and they have no skin in the game. It's a whole different ball game when you're in prop, classic prop, not new age prop like we see today, where it is in my best interest to get you to do what's required, and it's in my best interest to hold you accountable. And yes, you will get fired if you don't make the turn or don't follow the process. And the process does not involve me telling you how to trade. That's not my business to tell you how to trade. Everybody has to do it individually, but I'll give you the foundation and I'll give you a method and you can watch. But overall, it's up to you to determine how do you want to approach the market. You know, I can look at a chart in many, many different ways, and I can see tons of opportunities. You can see tons of opportunities to get long or short in different time frames. So I'm going to help you define your risk, define your targets, define your goals, your weekly goals. I'm going to help you understand how the market rotates, how to determine risk, support, resistance, and the mindset you need to have. You know, everybody had to learn to meditate. And I have a direct interest in your bottom line because that's how I'm going to get paid. And I just put up $25,000 to back you. So it's a different ball of wax than somebody who's like, oh yeah, well, this week you're going to focus on this. And then you come back and you say, well, I focused on that and I'm having a hard time and the results were this. Oh, well, this week you're going to focus on this. I don't feel like there's a lot there in terms of motivation to get you over the line. And I may be completely wrong speaking this way of mentors, but I don't feel like mentoring is the thing. Accountability is what you need. Accountability is what everybody needs. Be accountable to yourself. Better yet, be accountable to others. Have someone there who's got the authority to pull the plug, to tell you you're not trading tomorrow because you breached your risk parameters today. That's what makes a difference, honestly. And it's the same for every other thing. You want to be a professional basketball player? It's not going to happen at your local neighborhood court playing, playing pickup games. It's not. You're going to get to a certain skill set, but that's it. But if you join a team and you're not following the plays, you're not following what the coach is saying, you're not showing up on time, you're not doing the work, you're not staying behind and taking 800 shots or warming up with 800 shots an hour before the rest of the team comes in for practice like Kobe Bryant used to do, then you're not going to make it. And the consequence is you're going to get cut, or you're not a starter, or you just become a spare player that only plays when somebody's injured. So you're not going to get paid. You're not going to succeed. Accountability is missing. So when we say 90% of traders fail, and I did not create that statistic, I think it's a BS statistic. Who are these traders? How are they approaching the market? What is failure? Is closing an account failure? So that's what making the turn is about. It's about understanding, here are the pieces I need, and here's what I need to do, and I need to do this like my life depends on it. That's the accountability piece. What else do we have? Probably one last question.
Yeah, there's one last one we can hit is in your prop experience, were traders all present of each other's performance and P&L, i.e. accountable to each other, or were they just accountable to their risk manager?
They were accountable to me, but I got to tell you that knowing how others were doing, and I made sure that it was known, was a huge thing. So I'll give you an example of this. I moved to Chicago. I stopped trading equities after 9/11. I moved to Chicago to trade futures. I joined a trading firm in the Board of Trade. And I'm sitting here banging away on the $5 mini Dow, and I'm having a hard time just getting 20 bucks out of the market after having traded equities. It's just really hard. And I'm banging away, and all of a sudden, I start to see, some decent days, $200 here, $300 there, mostly luck, mostly randomness. But you want to know what made me really take this thing seriously and showed me that I'm just horrible at it? I found out that somebody who started the same time I did traded the non-farm payrolls one morning in the DAX, in the German DAX, and made $25,000 net. And they started the same time I did. And until that point, I didn't know how everybody else was doing. I just believed that I just need to go at my own pace. What do you think I did next? Any guesses? How is that motivational to know how someone else did? Come on, somebody's got something. No? Okay. I started finding out how everybody else did. I started to see that my story in my own head about why things don't work out and why I'm not making money is absolute crap. It's absolute crap. It told me that others are doing it, and therefore the problem is me. And so I switched products. I couldn't go to the DAX. It was just too fast, too heavy. I switched to the Euro stocks. Basically, it trades like the S&P 500, but for European products, Euro stocks 50. And I started to really focus on, just putting up green. That's it. There's no excuse. And I started to ask around how others are doing. I was very blunt. Hey, how'd you do today? What'd you think of today's action? And I started to find out that more and more people were making money. Again, past performance is not necessarily indicative of future results, but these people that I started with were already making money and I was not. So I was performing very poorly because I could sit here and justify why I wasn't doing so well. I was giving myself too much time. And that really made a difference for me. And then within, I remember it was like 3 weeks, I had my first 1,000 euro day, 100 ticks on the euro stocks. And it was a big deal. And I just knew that I knew that I didn't have consistency, and I knew that the next day I might blow up, because every time I made a new high, I'd blow up the next day. I'd go limit down. But what I did was I just kept the wins to myself, but kept checking my performance. So it became about doing better than other people, because I knew that it can be done. It's no longer about the market. It's about what I can do versus what's available. So it was very important for me to find out how people are doing. So when I started my prop shop in late 2003, I decided that it would be obvious how everyone's doing. You know, at the end of the session, good job, XYZ, great day, good control, best day. And you know what you notice? On the same day, it was very often that one person would have their worst day or be limit down, and at the same time, another person would have their all-time high. And it's like trading the same product. So trading time frame became a really important piece, and just the condition of the trader became a really important piece. You went out last night, you were out late playing poker, getting drunk. The next day, it shows up in your numbers, period. And so that made a huge difference for me. So back to the question, in performance, yes, knowing other people's performance is a motivation, and it also creates accountability to oneself. So if you had a leaderboard you could look at the end of the day, imagine you're trading the Russell, the micro Russell, let's say, and everybody's on the same leaderboard, and you see that one person made $600 in the micro Russell, and you got by with 30 bucks. I don't know about you, but I'm going to be looking very closely at what I did that day and what the heck they're doing different that allows them to put up that kind of performance. And so it drives away this thing where we show up and we kind of wing it and we don't do very much. We don't give it an effort and then hope for the best. And we can justify our lack of performance over time, and we can be on a simulator forever. All of that goes away when you see that other people are pulling it off. I'm going to leave you with that thought. Good luck, and hopefully answered most of your questions, and hopefully you walked away with something new today to motivate you to do better. Good luck. Thanks, Landell, for moderating.